All right, we're live. Hey everyone, this is Casey from Techstars. Welcome to our live AMA today for female founders and funding during these days. So if you are watching and tuning in, go ahead and let us know in the chat box to the side. Let us know where you're tuning in from. I see we have Berlin, California. We are all tuning in from our homes, so apologize for any child noise or puppy or cat noises. So today we're going to be discussing fundraising in these kind of times, and then we'll also be taking your questions. If you have a question at any time throughout the broadcast, there's an ask a question box below. You can go ahead and submit your question, and you can upvote your favorites there. And so I'm going to go ahead and pass it over to our speakers to introduce themselves, and then we'll get into some discussion. Thanks, everyone. Jenny, do you want to start us off?
Yeah, great. Hello, everyone. First, just want to say, hope everyone is healthy, is staying inside, and is banding together during these hard times. So we're really excited to have great people here to walk you through some of the resources and some of the kind of combined learnings we've all had over the years. So thanks for tuning in. I'm Jenny Fielding. I'm Managing Director of Techstars New York and also the founder of the fund, First Tech Fund, focusing on local founders, based here in New York City, and excited to be here. Anna?
I'm Anna Barber. I'm the, as of yesterday, I'm in Los Angeles, California. And so Joanne and I, who are both in California, are now under shelter at home. Per the governor's orders last night. So shout out to all those of you who are also in that situation and are at home. I have two teen boys here with me who are in virtual Zoom school right now. So we are making the most of our space here. I'm the managing director of Techstars LA and a partner in Jenny's fund, focused on writing first checks into LA companies.
And I'm Joanne Wilson. I am a New Yorker, although I spend my winters out in LA. And I have been involved in the tech industry since the mid-90s. So this is not, they're all different, but I've seen many down rounds and implosions of an economy. And I've invested in over 130 companies, all startups. I say 80% of them, I was probably the first penny in the company, sat on multiple boards, and ran a conference called the Women's Entrepreneur Festival for 7 years, as well as I have a blog that I've been writing for, 16, 17 years now, called Gotham Gal. And on there are probably about over 350 interviews with women founders. Some are written and some are in podcasts, which we do on Mondays, Positively Gotham Gal. And I do a bunch of other stuff on the side as well.
I've been on Joanne's podcast. It's great. So definitely check it out.
Awesome. Great. Well, I'm going to jump in just for a little background. We were pretty excited to do this and to have, Joanne with us as well. We have all been longtime operators and founders and have gone through some really trying times. And, we're super excited that more and more women are getting funded. We also realize that, women are raising less capital and have to do more with less. And to a certain extent, I think that's what we're really good at. So we hope to, talk to you a little bit about some of our experiences, give some resources and also just some tips and hopefully some good positivity of where things can go. So we're really excited that so many women are tuning in. Please put your comments and your questions. There's questions that you can ask. There's a question button below. So please ask your questions. We're going to go through a little bit of background and ask each other some questions, and then we're going to jump into the Q&A. So please start queuing those up. So just a little bit of background on me. I'm a multi-time founder. I think of myself, even though I've been investing for the last few years, I really think of myself as a founder. In 2006, I started my first company when New York was really not a great place to start a company. Now it's, the second largest tech ecosystem. But I started a company and most people thought I was kind of nuts, and ran that company for a few years, essentially bootstrapping. We'd raised a small amount from kind of friends and family, but really I had come from a finance and law background, and my idea of running a business was really getting to profitability and being self-sustaining. But then someone, a few investors and other people really kind of encouraged me to think bigger and, where the company could actually go. So in the summer of 2008, I spent a lot of time out in California trying to figure out if raising capital was right for us and meeting, a bunch of VCs, and spent a lot of time with our board and our advisors and people, really kind of mapping out what a large vision could be and how much funding we'd need. So spent the summer out in San Francisco, driving up and down Sand Hill Road, and with the hopes that we were going to raise a seed round, which back then was a large seed round, probably $2 million, which now is kind of a drop in the bucket seed round, I guess. And in the middle of this, as many of you guys know, in September 2008, Lehman Brothers collapsed, and it all of a sudden kind of our dreams of raising this round really changed. But we had all these plans and we had started hiring people, and we were pretty confident we were going to be able to raise that round. And so it was, quite shocking when, capital dried up and, people started, getting super nervous, and really there was like a pause in fundraising. And, the big lesson for me, that kind of have two takeaways from this moment, which, was one, that we'd done a lot of planning of like how things could get bigger and where we would, how we could use this money. We never did any planning on if it didn't work out. And so, my big learning for that was like, definitely have contingency plans. And, I guess I'm saying that to many of my founders now, like, we don't know where things are going. Things are happening in real time, but have a plan in place. Should you need to, rethink your finances? Should you need to redo your projections? Should you need to cut employees, right? And so put those plans in place now, so you're prepared. And then my second kind of takeaway from this experience was really around surrounding yourself with people that had gone through these experiences before. We didn't really have anyone that had gone through the .com or kind of had that experience surrounding us. We had investors and people that were kind of fueling our excitement around raising this big round and building $1 billion company. But we really didn't have people that we could talk to. And so when things didn't work out, we didn't really know where to turn. And so I think we're in a really different age right now where, mentors and advisors are plentiful, and there's lots of resources out there. And so the other thing I would just encourage you is surround yourself with people that have, gone through hard times before, and people that can really help you talk through some of these issues. So that's a little bit about me and my experience, and I'll hand it over to Anna.
Thanks, Jenny. So like Jenny said, we've been here before. I actually went through both the bust in 2001 and the downturn in 2008, and I was in two different situations. I left a very safe corporate job. I had been a corporate lawyer and working at McKinsey. In 1999, I left to join petstore.com, which at the time was a, high-flying venture-backed e-commerce startup that, became emblematic of the crash actually in 2001, because there were 4 startups in the pet e-commerce space that had all raised over $10 million. And by the time petstore.com, ended up failing and sort of selling in a fire sale to one of our competitors, the Sock Puppet. If anyone remembers the Sock Puppet, that's who we got sold to. We had raised $90 million. And I was at the time running the product team. And what I got out of that experience, which was, incredibly valuable, and, exhilarating in a way to kind of ride that wave up, and then kind of terrifying to see, how everything crashed and the world changed, was, that there is no such thing as too big to fail, that $90 million doesn't mean that your company is going to succeed. And that kind of nothing is written in stone. And then also that, everything is negotiable. And at the end of the day, your vendors and your partners want you to survive and thrive more than they want to get fully paid. So I learned that it's possible to pick up the phone and renegotiate a contract, which as a lawyer who saw things very literally and in black and white, I hadn't really recognized before. So then fast forward to 2008, I founded a company that was actually a retail company in 2006 with a woman that I met on an airplane while I was 7 months pregnant, which is a whole other story. But we raised money for that company in 2007, and we opened our doors in June of 2008. So in June of 2008, I was the CEO of a tiny retail startup. And then as Jenny mentioned, Lehman Brothers, the fall of 2008, the bottom kind of fell out of consumer demand. All consumer spending was really depressed for a while. And what I learned going through that was how to be kind of laser focused on what our customers wanted. And we didn't have the luxury of relying on foot traffic. So every person that walked into our store was a person that we had to pull in there. And I would say the positive about that was it forced us to iterate really quickly and figure out what business we were really in. We ended up adding 4 or 5 business lines very quickly in order to utilize the space better. And we did raise follow-on capital in 2009 and ended up growing that business, including expanding to New York before we sold it. I think what's different and interesting about the environment today is in both of those periods, there was much less institutional early stage capital. So I raised capital all from individual angels. There weren't a lot of people like Joanne, back then, and now there are pre-seed funds, there are seed funds. We have a much more well-developed early stage ecosystem. So that kind of gives me hope that it won't be quite as challenging, because I think that one thing that drives up first is, amateur angels who, are not doing it as their full-time career, or doing it really as a side hobby. And so there's a lot of other sources today. But when I think about the space that we're faced in now, and, as Governor Newsom said last night, what is required to kind of meet this moment, I think about kind of needing to be a wartime CEO and what that means. And I don't necessarily love the term wartime, because we're certainly not fighting with each other. And I think what's really called for is actually the opposite of that. It's actually empathy and compassion, and kind of leading with empathy and compassion. And so I would say, in terms of thinking about approaching this moment, it's, first to take a breath and make sure that you're practicing self-care, and that you stop and pause and take care of yourself and your team and your family first. Ben Horowitz said something that I love, which is take care of the people, then the product, then the profits. And so if you keep that kind of first and foremost, whoever the people are that are in your universe, that's the most important thing. And then, reevaluate your business and your plan, and figure out where you need to move more slowly and where you need to move more quickly. So move more slowly when it comes to spending money, move more quickly when it comes to cutting spending, move more slowly when it comes to rolling out something new when you're not sure of the market opportunity. Maybe you want to do a little more testing. Move more quickly if you can roll out something that seems really useful to people. So you're just going to have to adjust your speed and your tempo. And then, whatever your approach, I think just keeping in mind empathy for everyone involved, which includes, investors who may also be stressed out and feeling the pain, your customers, your team, everybody involved, we're all going through this together.
Great advice.
All right. How about you, Joanne?
I mean, I just want to champion what you just said, Anna. I think that wartime is a big word, because there's no ammo, but in many ways, this is very much like a wartime situation. And I think that I can point to, I think 2008 is probably a better something to recall versus 2001, because technology was just beginning at that time. And so, everyone thought, oh, the internet's now over, and obviously that did not happen. But I think it's important to be empathetic and to understand the anxieties of the people that are working for you. Everyone has different anxieties and different feelings about this. And, I think the most important thing is put your foot on the gas where it makes sense and take it off massively where it does as well. You know, I've been telling companies for the last 2 years, get profitable, get profitable, get profitable. The thing about being profitable is that you are the master of your own destiny that way. And that's really a wonderful place to be because you can be offensive instead of defensive. But I do think that it's going to be strange for quite a while. There will be a lot of people, not only on the side of the founders, but many people on the side of the investors who have never lived through a down round. And there's such money that has been flowing through the economy really since the banking debacle. You know, Obama saved the country. But on the other hand, he also didn't put anyone in jail and created this massive amount of money that has flowed through our system. And there's a lot of companies very similar to Pets that will lose 90, 100, $150 million. I think a lot of the CPG companies are going to be destroyed. And as you know, Jenny said, $2 million seems like nothing now for a seed. I hope we go back to what we were when all of this started, because I feel that, you know, 500, 750 is the right number for a seed, and the valuations that should be somewhere between 3 and 5, not 10 and 15, because you've already shot yourself in the foot before getting out of the door. And that has been amplified over the past, starting really in 2009 when things started getting back on track. And, you know, we needed a major check. Certainly, I thought it was coming. Can't say I thought it would be a pandemic that was going to send us here. But you know, I think it's time to reevaluate and rethink about all of our businesses. And, you know, I'm a big fan of always being smart and scrappy. But, you know, it's easy not to be when there is ample cash and a group of investors that are just pushing you to grow, that you believe in, that think you're going to bail you out when you get to the point where you need more cash, but actually they won't. And so, you know, one of the things I always say to founders is, if you succeed, everyone thinks they're a genius. If you fail, all on you.
Awesome. Those are good insights, Joanne. So just to kind of take it into present, things are happening so quickly. And I know that the environment is just really changing, and many of you are in the middle of raises, you're thinking about raises. So just love to hear kind of, Anna and Joanne, what are you hearing on the West Coast, you know, from investors, just to give us a sense, and I'll kind of talk about New York a bit.
Sure. So I actually just spoke last night to Laurent Grill, who's an investor here in LA, who surveyed 150 investors, and only 4 of those investors said that they were not writing checks. And almost all of those 150 agreed to allow their firm names to be published in a list that will be made publicly available shortly, you know, with their commitment that they are still writing checks. Now, that being said, I can't imagine that the process is going to look anything like it looked 2 months ago. So I think everyone has to understand it's going to be a slower, longer process. People are going to be more cautious. I have heard investors say they are unsure about how they're going to build relationship. And especially at early stage, it's all about people. It's all about relationship. And how do you build a relationship over Zoom? So I don't think those questions have been answered, but I do think there is still going to be an appetite over the next 6 months to write checks. I would qualify that by saying I don't think the next week or 2 is the right time to reach out. I think people are still adjusting to the new reality, and a new intro, you know, it's going to not be a good time to make new intros, you know, in the very, very short term. But so, Joanne, be curious what you think.
Yeah, I think they're all full of shit. That's what I think. I think that here's what's going to happen.
This is why we invite Joanne to the AMA. We want the real talk here.
I think everyone wants to put forth that, you know, they're good people and they're investors, and of course they're going to be there for all of us. No way. I mean, think about what you did personally when all this shit went down, right? You're going to look at your finances. You're going to look at your refrigerator. You're going to make sure you're fine. You want to make sure your friends and family are fine. And what do investors do? They're going to make sure that all their companies are fine. Right? They're going to make sure that they all have long runways. There's certain companies that, might been struggling, and because of what's happening, all of a sudden they're the hottest thing ever because they're the perfect company to, be exploding in this time, like, what's it, outside, or drones, so there are things that, or even Blue Apron, who would have thought, right? So, I think that everyone is doing a check on their companies internally. Does it make sense to put more money into that company now that they can ride the whatever wave it's going to be, 18 months, 6 months, 2 years, and everybody is going to cut back and think about how you can make that capital last as long as you possibly can to get to the other side. I think the frightening thing for everybody is, what is the other side? What does that look like? I think that we will see a lot of these large CPG companies that have been fueled with massive amounts of capital that have been overvalued since Series A, are going to be in a big trouble. I think we'll see multiple companies roll up at the end, with one phenomenal, hopefully, person that is a great leader and guider and knows how to build. So, it's going to be a massive shakeup, and to think otherwise, you're fooling yourself.
Yes, well, I think that's well said. I will just, from New York, I can say I've spoken to a number of angels, and the word I keep on hearing is pause. We're taking a pause. So I think, investors across the board are really thinking that way. I think that is the real truth. Although, deals will continue to be done. I think people want to kind of take a moment, take restock, and kind of figure out where the world is going. And because things are happening literally in real time, it's so hard to know that many of the investors I've talked to kind of privately, although they say they're open for business, are kind of taking a wait and see approach. So I'd say that's kind of what I'm feeling here in New York.
I've heard of term sheets being pulled, by the way, I've heard of term sheets being pulled by investors that shouldn't be investing when they make a commitment, 2 years ago when everything was hunky-dory, and then deciding at the last minute, even though their term sheet has been signed and bonded, to pull out. Those people should not be in this marketplace. And I've been touting for a long time that I think that a lot of the funds will not be paying back their LPs, because at the end of the day, it's where you enter and what the price is. It doesn't matter if everyone did the right thing, everything was fantastic. If you're not in at the right price, it makes zero sense for everybody. And I think we've seen a lot of that. But if you have a term sheet and you're in the middle of this term sheet, I have 2 companies right now that have term sheets. Everyone is definitely going to be closing on this. Everyone believes in these companies, and timing is right for those companies. They are going to be an integral part of how people are using what's happening around the world right now. If you're a luggage company, you might be having a hard time that someone's actually going to put through that term sheet.
So Anna, what are you hearing, angel versus VC, right? So obviously, if you're a fund, if you've raised recently, you probably have some money there. So how are you kind of thinking about this and advising your companies?
Yeah, angels, I think, are not active right now. I think they're taking a pause, right?
For a while.
Yeah, if you think about this from an angel's perspective, right, this is part of their investing strategy for their own retirement, and they're just thinking about this in a portfolio way, right? And it's not, so I would not expect that market to bounce back anytime soon. I'm seeing funds that are in the middle of doing deals actually do them. So I have 3 deals closing this week. I have not seen indication that those deals are not going to close. But again, those were term sheets that were written, before this all happened. They're companies that in all three cases still have very strong prospects in the current environment because of what kind of companies they are. I have heard a little bit of companies getting interest where they have a particular, like in the gaming space, for example, right, which is exploding right now. Anybody seeing insight in gaming, right? And there was a gaming company I heard about that's raising that is still getting new VC meetings right now. But I guess, those are probably the exceptions rather than the rule. Around that was already in progress of a company that had a lot of momentum and has a strong lead investor that is staying the course, may be able to continue filling that round. I don't think like a new deal is going to get off the ground at this point.
Yeah, so for founders out there who, are a little less familiar of how, the funds actually work, is that funds don't just, for the most part, raise their capital all at once. They do what's called call capital when they need it or quarterly. And so if they're limited partners, the people that are giving them money are unable to provide that money, say that, they're a family office, that the industry that they're in has just been hit or whatnot, sometimes they cannot call that capital. And so that's something I imagine that we're going to be seeing more and more. I heard about a case already in London from a pretty a new but well-known fund that had made a commitment and then couldn't call the capital from their investors. So it is something to kind of be aware of. Obviously, that gives a lot more credibility to funds that have been around for a long time, where their funding sources are more stable, and they've kind of gone through these issues before.
So a question might be, how could people continue to stay in touch with investors, and how should people continue to communicate with investors if right now is not the right time to, be asking for money or making a pitch?
Listen, I think one of the greatest things Techstars taught is how you write these letters, the good, the bad, the ugly, what you need, right? And so I think you should think about writing out to the people that you've had contacts with and what you're thinking, and being honest and being authentic, and what you're thinking and what you're going to do in order to get through this. I've had a couple emails in my box about people raising money now, and I'm thinking, bad move. Like, no one is going to be focused on that right now. People are going to be locked in their homes for an extended period of time. There is no data coming out of, from the federal government, which is a complete shit show. And, you've got the Senate, each governor that's doing different things by different states. And it's an embarrassment as a country, but that's the reality that we're living in. And we don't have test kits. And so this is going to go on a lot longer than all of us think. And so to send anyone who is even like a massive angel who always looks at deals, they are not going to be focused. They're focused on, not losing their shit because they're in their house all day. And so I do think that, you got to lock it down and think to yourself, do I need to have 40 people here, as hard as those decisions are? Or, do I really, is my product make sense for now? And think about the feedback that you're getting from that product. Does it make sense to even pull back even farther, that it's just me and the co-founder, and rethink about a platform? Like yesterday, I talked to a couple that had a really interesting platform. It was called, what they did is, like, if you go into a coffee shop or your local store, is your friend from wherever they are could send that store a gift of kindness and pay for your coffee, right? And I was just like, okay, no one's going to have coffee right now. So, could you send them gifts of kindness anywhere? What does that look like? And so, and I'm just giving you an example of how you can rethink what your platform does or what you've built for this time period.
So I know probably 24 female founders in New York right now that are mid-raise. And I know that you guys have both touched on, what to do if you're, in the middle of the raise. So say you're raising a pre-seed round and you've started to collect some checks, but that might be stalled, or you've been in discussion. So maybe, Joanne, you could start it off, like, because you kind of mentioned it. What advice would you give for founders that are in that position?
Well, if you've closed some capital and it was a rolling close and you have money in the bank, you should be high-fiving yourself. And I do think that there is something about having capital in the bank during a close that, for whatever reason, investors find that more comforting, right? Oh, good. Other people have put money in, they have money in the bank, that's a good thing, I'm willing to put money in, versus like, oh, we haven't made a close yet, right? And so if you have commitments from people that planned on closing based on this, I would just reach out again and and try to do a rolling close, because there is a comfort level to that. And just ask. I think that you've got to be open, honest, and transparent, and ask straight out, are you going to close this round with us? And none of this like circular stuff that people do, which is like, we're taking a pause, or that's really great, you should get back to me when you're at this point. All that means is like, I'm never going to talk to you again, right? So I think it's important that you ask those people, where are you on this? Is it real? Are you going to fund me? What's your advice? And that's the only thing you can do.
Yeah, and I would add to that, if you're in the position where you have a bunch of commitments, but you haven't closed any capital, before you go back and ask them that kind of like, are you in here with me? I would actually communicate proactively with them what you're doing to respond and kind of change your plan. So I would go back to them and say like, okay, we're in a new world here from when you made me this commitment 3 weeks ago. Here's what I'm doing. We cut our burn, we've altered our product strategy. Like this runway can now get us to this point. We're going to close a smaller round at a lower valuation, whatever it is, because that looks like leadership. That is leadership. That's what they want to see. That's going to give them comfort that if they follow through on their commitment, that it's going to be a good investment, and it shows them you're going to be able to lead through this crisis. So I think it's risky to just sort of go back and knock on the door and say like, are you still going to write me a check, right? Without first like offering them, because now you have to almost repitch the whole thing, right? And if I'm that investor, like I'm like, oh God, I made that commitment. Like, how do I feel about it? I want to make sure that I still feel really confident, still feel really good.
I think that's great advice. They want a leader, right? And I think one of the things you have to do, if you really believe your company is going to be worth millions and millions of dollars and you're just on the beginnings, go out there and drop your valuation immediately. Show leadership, because that's the first thing that's going to be dropped.
Yeah. I got to tell you something. Sorry, Jay. Let me just get this one thought out. I mean, I've seen some emails come through my inbox from founders, and I'm like, yeah, this woman is rising to the occasion of this moment, And there are some people that thrive in moments of crisis. Like, those people who, like, when there's emergency, they just get really calm. And you're like, and you see them kind of like come into their own power. So I'm saying like, be one of those people, like, because those people are going to succeed.
Agreed.
Yeah. I also, it's been really interesting. So I also have a large portfolio, about 130 companies, and it's been interesting to see the founders that have been sending updates to their investors and mentors, and the ones that haven't. And the ones that have been really coming with powerful message on what they're doing and how they're adapting, and how this might actually be an interesting opportunity, that they're able to be really nimble. And that makes me as an investor feel very confident. So first piece of advice I would say is definitely be communicative with your stakeholders, with people in your community, and really, show, as Anna and Joanne said, that leadership. I think it's super important. Let's take a kind of a turn and talk a little bit of what we can be doing, or what we should be doing as founders if we do have to make cuts and kind of tighten our belt. So this is a very precarious moment, and I have not been advising my founders to cut people at this moment, but to really start putting those plans in place if they need to. But there's other things that you can do, and so love to hear from Joanne, the things that you think founders should responsibly be looking towards.
Well, I think it's the same conversation we're having. I mean, responsibly is, where can I cut so that my burn runs longer, period. I see someone asked a question, how do you drop a valuation when it affects the previous investors? Nothing is standard. It's all about legal documents. As long as your legal documents reflect what you want to do, the people that are already in will be super fucking happy you drop that, because now they'll have more ownership of your company. And I think it will show leadership. So I just think that you need to reassess everything from bottom up and make decisions based on how can you survive and get through whatever it is, because none of us know, to the other side, and have money still in the bank if you have money in the bank.
Great.
Don't spend money on marketing. None. Zero. Do not go out there and try to attract new customers now. Now is not the time. The time is talk to the customers you already have.
And if you're going to really do a floor to ceiling audit of your expenses, you just get your bank statement, get your credit card statement, evaluate every line item, see every dollar that's going out the door, and ask that dollar to justify itself. How is it contributing to your business? And then, in terms of your people, I think, you need to have a plan. If you do have headcount and salaries, maybe, a better option than looking at laying people off is seeing how you can rejigger salaries and get people to take cuts, or sort of, you have another currency that's available to you, which is your equity, to use to kind of, change the ratio of cash and equity that you're offering to people to extend your runway further.
Yeah, just building on that, I think it's a great opportunity as founders and leaders to, to come together and say, like, if we need to do this, this is our plan, and our plan is about us reducing, our salaries as well. And so I think it's a really good team building kind of horrible exercise, but like an important one where, you really look to your employees and you say, like, what, can you live with 20% less salary, for the next 3 to 6 months, that we can all stay together. And we are doing that as a team. And I think there's a lot of great things that can come from that. So I see a question on the queue about small business loans, and kind of love to hear a little bit more about alternative financing. I know, Joanne, you have a little experience with that. So, maybe you could jump in.
So these SBA loans are horrific. Do not take one. The problem with the SBA loans, which is just mind-boggling to me, is that in order for you to get one, you have to give a personal guarantee. And that could be putting your house up for collateral. Do not do that. I have seen one founder that almost lost their house. Okay. I don't understand. It's like FEMA, FEMA-backed insurance. You're paying the government for your FEMA-backed insurance. So we pay the government on a monthly basis to have our insurance. And then when you have a flood, they pay you 10%. I mean, it's like a secret in the government, right? It's like they're screwing us while taking our money. And so, do not take one of these loans, and do not take a personal guarantee. There are other places that have given up capital, such as Shopify does loans, Flexport does loans. Their covenants aren't high. They're kind of minimal, but they do take a percentage. As long as you know that you can roll back and pay them every month, you're going to be fine. But if you can't, don't get into that. There will be a lot of shysters out there who are also investors that will come in and say, I think you're great. I love your company. I'm going to put in this, but I want to own 52%. Don't do it. At one point, you have to stand back and look at your company and say, does this make sense for me? Trust your gut. I know as a founder, you sort of get into this like myopic, this hole of just like, what you're doing and hard to get out of the weeds. And you hear from founders like, I pitched 30 people and I'm not getting traction, or, I'm so pissed because, for whatever reason. And take yourself out of that and say, wow, maybe there's a reason this isn't happening, right? So don't take money just because it's going to keep you alive. Think about the money you're taking.
Great.
That makes a lot of sense.
We have a question here. Do you think seed stage investors will shift their focus on the types of companies they invest in, like focus more on health, remote tools, and biotech? I mean, I'll just start off by saying yes. I think, the conversations that I've heard, from investor friends is everyone's looking at their portfolio and saying like, okay, that was a good one. We invested in future of work, or, that one's going to get hit. And I think, for the next foreseeable future, it's going to be, pretty much front and center in their minds of, what is the trajectory of these types of companies. I think health is going to be an area that explodes. I think we all are, somewhat excited about how telemedicine is, changing the healthcare system. And I think we're going to see more of that on the health side. I think there are certain areas around financial services and other areas that are very opportunistic, obviously future of work. So, that's my perspective, is that investors are really going to be looking for that. So my advice is think about whatever business or whatever vertical that you're in and how you can kind of play into some of this. And not from just a perception point of view. I mean, genuinely, how can you either take advantage, or bulletproof yourself in these industries?
Yeah, I think that, 15 years ago, or 12, 13, whatever, it was very easy to be a generalist as an angel investor. Technology was just touching the surface about these product of new companies, right? So it was changing medical, it was changing health, it was changing CPG, it was changing, everything. And I think a lot of the venture world, the smart venture world, has gone through different phases. You can look on their websites and see what they've invested, and then dig behind, look behind the curtain where it was the future of work, or it was heavy duty back end software companies for something, and then they moved into health, and they moved into cryptocurrencies because that's going to be the next wave. And so I do think that angels that I think a lot of them are probably already looking at those new areas, but I also think that it's harder to be a generalist. So for me, I haven't done any real health work because my feeling is that is an industry just like cryptocurrencies or just like biotech that you literally need to spend 24/7 in to understand, that there's already 50 companies doing this, or, there's 7 that are so mature. Why are you thinking you can change this? And so it's got a lot more layered in the angel world. And so it's family businesses with family funds that have become a lot more important as areas of funding in the last couple of years that have serious, deep understanding of particular areas, be it health, be it retail, or whatever it is that their family's in, real estate. And that's where they are, we'll see the opportunities and we'll put more money back into that.
Yeah, I think the things that are going to be the hardest hit, are the obvious ones where consumer spending, plays in. So luxury, travel, fashion, beauty, retail, things like that are going to be the ones that are going to, take the most direct hit. I have, this could be wishful thinking or Pollyanna, but, I have heard people saying that given the ability that we see for society to respond so quickly to this threat, that it's given people more confidence about our ability to respond to the climate crisis. And I am hopeful that that will translate to an increased interest in the venture community in investing in climate tech.
Yeah.
I don't have any evidence. That's just what I'm hoping.
Yeah, no, I'm at a couple of venture firms. I think it's important. I think one of the things that's most interesting, see how we end up, but I'm sure all of you have been watching, is that once a country was locked down, the air actually got clear, and, that says that we can actually fix the mess we've gotten ourselves into.
So here's an interesting question. The Wall Street Journal discussed that women startup leaders may feel the effects of this more acutely because they're raising less money. How can we work together as a collective to ensure that the economy doesn't hit female founders harder, including closing their companies? So I thought that was an interesting question for us to talk about. I can say from my own experiences running a company that was really had to run at profitability, because that was the reality, that I feel like women are, well suited for doing more with less. And I've seen many women kind of have to, get their businesses much further because it's much harder to raise cash. So I think that we're actually, female founders are at an advantage here because it's been the status quo. So, curious what you guys are seeing or thinking.
Yeah, I mean, listen, it's the same thing that we're continuing to talk about. I do feel that in the years to come, and hopefully not many, we're going to see a lot of the female founders that had been funded 10, 12 years ago have public companies that are really public good companies, right? That people will be employed for a long, long time, or large companies that they built that have been purchased by other publicly traded companies or huge private companies, right? That's a bonus for females, because then we can all point to them and say, wow, look at them, I can do it because they did it. But I do think that going back to the investors, if we look at some of these investors now, which blows my mind, which is you have a brand new company, they go in and they pitch these investors, they're going to raise $2 million on their seed, which is no longer happening, but that was the concept, right, 3 weeks ago. And then you have another female founder sitting on the other edge of the fence who's been at it for 3 years, and their valuation is pretty much similar, but they actually have a product with people, but they're having a hard time raising money, which is mind-blowing because there's actually a company that's doing something and then one that has never even started. I think that we're going to have an eye-opening experience about really how long it takes to build these companies and what it is they're looking to invest in, versus just like tossing money into brand new stuff and looking really deeply at companies that are making it, that have been undervalued and underfunded.
Yeah, it's always tough to answer these questions because we have to generalize about female founders versus male founders, right? It's really hard to do that, but it is true that necessity is the mother of invention. It doesn't say necessity is the father of invention. And I do think, women tend to be flexible thinkers and ability to do more with less. And I think, at times like this, it's always kind of traction and results that are going to trump everything else.
Yes.
Right. So there's not going to be these team bets on like, oh, this is just a strong team that pattern matches with other strong teams I've seen before as much. I think it's going to be much more about results. And so that female founder Joanne was talking about, who's been at it for 3 years and who's accomplished a lot with very little, is going to be very well positioned, as the capital markets open up a little bit more to raise follow-on capital.
I agree 100%, Anna. And if you can get past this time, right, rise to the leadership, cut where you need to cut, make smart decisions, I think you'll be in a good spot.
And the other thing is back to this theme of we have more infrastructure and support now than we did, and after 2008, and the ecosystem supporting all founders and female founders in particular is so much better developed. So lean on these networks. Always is doing a deal referral system. There's lots of, there's something called the Female Founder Club that's referring people to investors. Like there's lots of these formal and informal networks of support, right, including the call that we're on right now, to kind of help you. So reach out to that community for support.
Yeah, I would definitely underscore that. There's so many awesome organizations and groups that are springing up, and it's a great opportunity to work with each other, right? To help each other, through these times. I think kind of what I learned through 2008 was that, if you can survive, you can actually build a really great company, right? Some of the most exciting companies were built in these really hard, or were started in these really hard times, right? And so, going back to that wartime CEO kind of theme, like it is your job to survive this, right? And so you have to get really scrappy. And, that's really exciting for many of you, because I think that, many of you are scrappy already. Think about alternative funding sources. I've had a few companies that actually were raising from VCs and could raise a lot more capital, but they decided to run campaigns on platforms like Republic, right? Because they really wanted to get some of their stakeholders involved. And so, I think that the crowdfunding platforms and some of the alternative funding sources are going to be even more prominent. Other questions?
I have a question actually for that I'd love to hear what you guys think about, which is, let's take, some of the people on the call I think are probably really early and haven't raised capital yet and really are in the ideation stage or just getting, the company off the ground. So how should those founders think about, what the path forward is, right? And how to make progress, or whether to continue to make progress.
Well, I'll have to do a shameless plug here and say that, at Techstars, we are writing checks and we're supporting founders, and we've got a great network and ecosystem. So whether it's Techstars or another program, there's a lot of support out there in kind of alternative funding. So don't always think you need to go out there and raise $2 million. There are these steps, and I think an accelerator can be a great way to get you there.
Yeah, I mean, I'm a huge fan of Techstars, but I would say in general, there's always silver linings, so you got to look for the silver linings. But you've got to be a leader, and I would tell all of you to, if you're a single founder or you're a co-founder, or there's a couple of you in a room, I would take some time to really think about what's happening in the world at large, and does this make sense? And if you're starting out with a brand new, I'm just making this up, as a brand new gluten-free product that hasn't even gotten really to market, or maybe you just sold to one Whole Foods, which is your beginning, I think you're gonna have a really hard time over the next couple of years. And so I think you just really have to do your research and be honest with yourself. You don't want to find yourself, and I've seen so many founders do this, you spend years and years and you just can't get over that abyss to jump over it, and you just can't move forward, and you've spent all these years underfunded and frustrated and spending 24/7 of your life towards that. And so now, based on what's happened, is a real good time to have a gut check about, does this make sense for me and my family and my life right now?
Do we think founders that have co-founders and strong founding teams are going to weather this better? And I don't know, I'd love to hear, Anna, what you think about that.
Oh, that's such a good question. Absolutely. I mean, I think right now, having a team and being part of a team is more important than ever. It is possible, and there are many great examples of successful solo founders who've built a team by hiring, or who've been able to access the community that they need. But right now, I think it's more important than ever to have people in the boat with you. Thinking about silver linings, there's lots of people in transition now. People have extra time on their hands. It's a great time, to coalesce with the people that you're working with, and maybe get more time from someone who's been moonlighting with you, or advising you on the side to kind of bring them in. But I would 100% recommend, if you're going to do this right now, do it with other people.
Yeah, that community support, having, when you go through rough times, having someone else to lean on is so important. So if you don't have a co-founder, but you have a really strong co-founding team, I think that works as well. But, doing it solo is it's really too hard.
Yeah. Or you have one particular investor that has been always your champion and talks to you and is sort of your consigliere. Talk to them. They probably have some really good insight and experience, and see what they have to say. Don't take it on your own shoulders. There's a lot of people out there who have gone through some down cycles, and even though this is different, like every single down cycle is, we too will come out of this. Where we're going to be, who knows? But humankind continues to move forward. We're not all going to be stop. It's going to be like a new world. What is that world going to look like? Unclear to all of us.
Yeah, so I had a founder reach out to me this morning who has 8 months runway, and she was planning to go out in Q2 and raise. And she's kind of wondering, should she wait this out a little bit? I think it's an interesting question. I'd love to hear what everyone thinks. Like, my advice to her was, can we make that 8 months stretch? And so can you make that 8 months 14 months by, doing some of the things that we've spoken about? Doesn't mean you can't go out and try to raise, but like, have you put in a kind of a contingency plan to make that last? Because you don't want to run out of money at an even worse time, right? Summer or over the holidays or something like that. But curious if people have money in the bank, but they were kind of planning to raise, what you both are advising.
Well, I would say if you were planning to raise, unless you're in conversations with people. And for what it's worth, in the last year or two, we're seeing a lot of companies raise from the same people that did the last raise, because they believe they already have money in and they actually really understand the business. So this isn't a new thing. It's kind of nice, right? So I've seen multiple companies raise the first couple rounds with the same exact people around the table. So that's one way to look at it. I would say if you got 8 months, Jenny, 100%. How do you get this to 12 months? How do you get it to 14? How do you get it to 16? How do you get it to 18? And I would not go out and raise money in the next 4 weeks, because I think you'll have a lot of those conversations, which is, we're not pausing, we're really interested. And the reality is that nobody's focused on this. And so on new companies, they're overwhelmed with what they have. And so if you can go out in 4 to 6 weeks when we have a clear idea of what's going to happen in that world, and say, hey, I had 8 months, now I've got 16 months, and here's the things that we did, I think you're going to have a lot better chance of raising capital. But I would also engage all the first people and say, it would be great. Here's what I've done. Here's what I've got. This now gets me to 16-month runway. What I would love to do is I would love to do a $2 million note with, 40% discount against the next round. Like, be generous. And, because these people are going to save you, and see how many people will put money in on that note. And then all of a sudden your 16 months is 36 months. And, you've got a long time to ride this wave. And if things change dramatically in 18 months, you can just go back into the market, then do a round. Everyone will convert at their 40%, and they deserve that because they saved you. I have a company that this happened to in 2008. The company didn't change. Only thing that changed is the white noise around us. And so every investor was so fearful of putting good money after bad. And so we made a lot of changes, and we got all the investors who were around the table to put in half the money of their original investment. And we created a note that said we will convert 30% at the next round with, I think, 5% interest. 18 months passes. The company is doing amazing because nothing changed in the company. It was always doing amazing. It's just the environment changed. And then we realized, you know what? We don't need to raise any money because we're going to take a loan and we're just going to use that debt to fuel the company over time. And so the founder was like, so what do we do? What should I do with this 18 months, this loan? And I was like, you're going to convert everyone at 30% discount to the cap on that note that we put on there because it's the right thing to do, because we all supported you. And if we didn't, this company wouldn't exist today. And that's what he did. And, that company ended up doing phenomenal. And, everyone still owns a small piece of it. And, we've all made 10 times our money. And so there you go. So I think that if it's good, it's good. And I think that's exactly what we're all saying here. If it's a good company and it deserves to exist, it will exist, but be smart with your cash.
Okay, so why don't we just do like a quick round of just final thoughts. My final thought is something that we haven't talked about, but I would really encourage everyone is be really, really communicative with your team. So you might be used to doing weekly stand-ups, do a daily stand-up with everybody. Just get everyone on the same page. It's a great time to, come together as a team. So every morning, like do your stand-up, bring everyone along for the ride. And then, with that, if you have investors already, get on the phone with them, send your updates, but really kind of be in close communication with the people out there that can help you. So Anna, final thoughts?
Agreed. I'd also say do that with your customers and be authentic and over communicate. Don't worry about over communicating with people right now. I'd also say look at this time as an opportunity, as I have, to kind of reevaluate your own life. And kind of how you're balancing and where you're putting your own energy and kind of how that, your work and your life are fitting together. Joanne?
Yeah, I agree with the both of you. I mean, I think you have to be aware of everyone in your companies has their own set of anxiety and things that are happening in their own home, in their own life. And as founders, sometimes it's easy to ignore those things because you're moving so quickly. But now is not the time. I have a founder that they're past the founding stage. I mean, they're pretty huge company at this point, but there's 75 people working in that company. And she was so worried about, again, this was 5 days ago, so it's like totally different planet now, which is that all day long they talk to each other. And so that's the beauty of that company, right? So all of a sudden now everyone's at home, and I said to her then, I was like, I think it's important to say to everyone, we respect your feelings. Like if it makes you uncomfortable to come to work, don't come. And then we'll find out who is like, neurotic. No, I'm only kidding. But, I think that, you can leave these screens up all day. I remember years ago, Foursquare's CMO was in Atlanta and the office is in Soho. And she literally had a massive screen all day long, sitting at her desk, just like we all are doing. And there was always an opportunity to go and interact. She was part of the conversation. So be clever and be understanding. I think that you'll get a lot more from your people, and I think you'll feel better as a human being.
Awesome. Well, I want to thank everyone for joining us. We had over 300 people, coming together to talk about this. I want to thank Jenny, Joanne, and Anna for the real talk that we all much needed. As a reminder, applications are open for both Jenny and Anna's programs if you want to, get more guidance and mentorship from them in LA and New York. And I put the info in the chat there. Be sure to follow all of these awesome women on Twitter for their latest thoughts and updates. And someone asked if this is being recorded. This was recorded. You can go back and look at each question and answer and the full video at this same link. We'll also be adding it to YouTube for easier watching and distribution after. We'll share that out on the Techstars Twitter. And I think we'll be doing more events like this. I'm sure Jenny will be messaging me right after for her next idea. So please follow us here on Crowdcast so you get notified of the next one, and follow us on social. And with that, we'll see you guys later. Thank you.
Thanks, everyone. Thanks, Joanne.
All right. Thank you.